Good afternoon, folks. Today we have an interview with Joseph. He's an agent with World Financial Group. Wanted to introduce him to the world and ask a few questions. Joseph, if you could please tell us a little bit about yourself and your work at World Financial.
Yeah, so I started over a decade ago in the financial sector. I was in the real estate industry, still am, but I figured it was a fantastic opportunity to make sure my clients that I didn't just sell them a home and move on. It was more of an opportunity to help them with all their aspects of their life, because a home purchase is not just a home purchase. There's assets involved, there's debts involved at the end of the day, right? The average home in Edmonton, for example, is about $400,000 to $500,000. So, and then majority of those clients, let's take a $400,000 home, are gonna put $20,000 down. By the time your CMHC insurance goes back up, you have a debt load of $400,000. Well, what if that person passes away and the stay-at-home spouse never worked a job in their life or doesn't have enough income to pay that mortgage? That's when bankruptcies happen, that's when repossessions happen, and I was seeing that a lot in my first few years. I figured, what's the solution to that? And the solution was just properly insuring people for a couple dollars a month. It was ridiculous how affordable insurance was compared to the negative outcome where someone could lose their home, and not just even on the life insurance, right? What if they got critically ill? There's a lot more heart attacks, cancer, stroke nowadays than when I started 10 years ago. And so we want to make sure those people are properly protected. And the final field would be the disability side, right? So I look at a conversation I had with a friend, and he said, well, what if you owned a apartment building that was generating you $300,000 a year in income or $200,000 a year in income? Would you not insure that with home and auto insurance? And I thought to myself, absolutely I would. And who wouldn't do that? And he said, well, that's how people live their lives. They buy cars, they buy houses, and they don't even protect their own income. And if their income stops, who's going to pay the mortgage? Who's going to pay the car payments? So I thought to myself, well, I'm not going to pay those bills for them, but I can find an insurance company that's willing to insure them. They get the coverage, their family's protected, their income is protected, their health is protected. Now that home and that entire family is protected, right? That was my main reason why I started. Yeah, 2011, I guess, would have been the year to do that.
So basically financial planning and financial literacy, if you will.
Financial planning, financial literacy, just some kind of education. I graduated high school. My comm class taught me I was going to be a midwife. I was supposed to be delivering babies based on my aesthetics. We haven't even had our own children yet, so I don't even know if I might pass out when that happens. I definitely wouldn't have been a good midwife. But one thing I didn't learn was how to budget a book. Understanding the negative effects of compounding interest on credit cards, understanding the positive effects on investments and the positive returns on those. Never planned for disability insurance or any of that stuff until I was much older. Thankfully, my health maintained and that I was able to actually get coverage. But I look at some people even in their early 20s. I had a client about 2-3 months ago, in their 31, 32 years old. He had a stroke last year in April. He can't get insurance from majority of the companies, and even if he does, it's going to be super expensive. So I educate people, quicker the better, while you're healthy.
Yeah. So when we talk about life insurance, what types of life insurance can you offer to your clients?
The best kinds. But that's going to be the generic answer for everyone, I think, but that's genuinely the truth. The best kind of insurance that someone can have is the one that's going to stay in force. So the one that's going to stay in force, but the life insurance, essentially, the short story summarized is it's going to be term insurance and permanent insurance, and both of them have their pros and not necessarily their pros. So with term insurance, the best thing about it is you can get a ton of life insurance. So you can get $500,000, $1 million of coverage for a small amount. The downside to that is generally you're going to get it on a term. So after 10 years, 20 years, 25, 30, 40, and anywhere in between that 10 to 40 range, your policy expires. You can renew it after 20 years, but right now if I'm in my mid 30s and I renew it in 20 years from now, I'm going to be 55 years old. the insurance companies assume I'm unhealthy, right? Which, if you look at the average Canadian population, most of them in their 50s are unhealthy. Then no one's taking care of themselves. Let's get the insurance when they are taking care of themselves, right? So the insurance gets more expensive. So then they say, okay, well, I want permanent insurance. And it's fantastic, especially for estate planning and long-term coverage. You will always have the life insurance. The downside to it is you pay more monthly. However, you're investing a little bit money for your retirement, and overall it's a fantastic long-term product. It just comes down to affordability. Like what I alluded to at the beginning was the best insurance is the one that the person's going to keep for their family until a claim is needed. A lot of people, what they'll do, including my own self, a lot of the advisors here, we have a combination of both. So we'll have some permanent insurance to captivate the positives of always having life insurance, having that estate planning, having that tax-free growth within our policy. But then we also captivate the bonuses of having a lot of life insurance with the term and keeping the premiums low.
All right.
So,
So let's say when you were saying $500,000, million, how do you calculate how much coverage your client needs?
generally, it's going to fall to a formula of 10 to 20 times coverage. So sometimes I'll sit down with a family and they'll say, I didn't realize I needed $1 million of life insurance. Why is it so much? Well, the reason for it is, again, average home is $400,000. People have a car loan, they have debt, student loans, things like that. When I'm sitting down with a family, the average middle income Canadian has about $500,000 in debt. They have the mortgage, the car payments, the credit card debt, all of that generally sums up to $500,000 in debt. So if you look at $1 million of life insurance being paid out, it seems like a lot of money, but when you take out the debt, so now the mortgage is paid off, the cars are paid off, everything's bottomed out, now maybe you're only left with $500,000. $500,000 seems like a lot of money. Well, if you look at the actual incomes, majority of the Canadian families are pulling in about $100,000 in income, like husband and wife, things like that. So if the husband passed away and he's earning $100,000 a year, and there's only $500,000 of coverage left, that's good for 5 years. And if they have a 5-year-old or a 10-year-old or a newborn, what's $500,000 going to do for them? So even arguably $500,000 is the base just to cover the payments. But after the debts are paid off, we also want to replace that individual's income.
Right.
So I know this is a long answer to a short question, but when we take off all the debt and there's $500,000 left, we want to look at investing that money conservatively, and that might pay out between $20,000 and $25,000 a year in income. So it's not what maybe the wife was used to getting from her husband, that $100,000 to take care of the household and take care of all the kids, but at least the house was paid off, and at least there's some reoccurring money coming in to help float it. But that's why we say 10 to 20 times income. So if someone's making $100,000 a year, I see it all the time, they have $100,000 of life insurance. What's that gonna do? 1 year, that's not even gonna cover 1 year after funeral, taking time off of work, it's not enough. People tell me I have life insurance at work, it's not enough. If there's $1 million of life insurance coverage, which if you're young and healthy, it doesn't cost that much, you're getting fairly cheap and affordable policies. I shouldn't have said cheap, it's affordable policies 100%, because it's a very big asset to have a life insurance policy if you qualify for it. But that $1 million pays out, $500,000 to debt, $500,000 to replace income. That's at 10 times coverage if someone makes $100,000. So sometimes people need beyond that. I personally have beyond that to cover my household incomes. We have 2 mortgages, we have no outstanding debts outside of that. But if I pass away, I want my wife to clear out all of the debt. She's gonna take care of my mom, her mom-in-law, our mom, and still have an income replacement forever and for our future children.
Yeah. So when you say if you get the coverage, let's say, what would be restrictions or exclusions to getting permanent or even term life insurance?
There wouldn't be any restrictions in terms of getting permanent and term insurance. It would be more so if they can qualify for it medically and financially. So for example, if there's a stay-at-home mom or a stay-at-home dad, whatever the scenario is, they're not going to get $10 million in coverage. Like, it's a very hard pitch to sell the insurance company why the stay-at-home spouse needs $10 million in coverage when there's no income replacement, etc., etc. I have heard it happen before. Maybe the owner of that policy, the husband is a massive oil field executive or so, and now they have 10 children at home, and if the wife passed away, he has to hire nannies and change up his entire career. Maybe. But that's like a fraction of a percent of the cases. Most people making $100,000 a year are going to get about $1 million of life insurance coverage, plus or minus, depending on their scenario, right? And that's a big thing. Everybody's different. So they'll look at income in a sense just to make sure they're not over-insuring someone, right? Because why does someone making $50,000 a year all of a sudden need $10 million a year also? It doesn't make sense, right? But also health-wise. So right now, technically, as of 4 weeks ago, I'm still uninsurable because I'm getting all, thankfully it's nothing. Don't Google MD is not your friend. I'm in Banff convention for a conference, and I'm Googling all these things that's going on with my stomach. I'm writing notes about writing my will in the back pages, and I'm going through some dark thoughts. Thankfully, it's not a big deal. But until my medical testing is done, which isn't going to be done for another 2 weeks, I've spent the last 6 weeks being uninsurable, still currently uninsurable, which means I can't actually apply for more life insurance until my medical results come back and I'm free in the clear. So right now, if I had zero insurance, which I have a ton, if I had zero insurance, until this doctor says you're free and clear and there's no more testing done, I can't actually get insurance. And I've had that happen where clients have rescheduled on me and rescheduled on me, and my receding hairline was going back, and I finally sit down with them, and the reason why we're sitting down with them is because they're getting bad news and they want to get life insurance. Well, it doesn't work that way. If you've been delivered the bad news, it's a lot harder to go backwards and get the insurance. Versus why I emphasize, if you have a healthy slate of health, get the coverage now. It's not a lot. Get protected, because if things happen later to you medically, and maybe you had a stroke and it's a little bit harder to get coverage, or now maybe you have a certain, there's a couple different types of diabetes, or you became incredibly sick, or you have a autoimmune disease or something like that, now you can't necessarily maybe get mainstream coverage, or you're gonna have to jump through the hoops and have to deal with definitely, you're not gonna get coverage online, going through the bank stuff, guaranteed it will be an auto decline. You'll have to use an advisor like us, and we'll have to shop around the markets to see what coverage we can get you. That 34-year-old, because he got a stroke before the age of 40, good luck getting coverage. I feel bad for them. They have 2 mortgages, they're expecting a child. We were able to get coverage for his wife and 0 for the husband at this point.
Wow, so yeah, that's one hell of a restriction.
That is, yeah.
So let's touch on beneficiaries, right? And how can that be set up, if it can be changed somehow down the road, and you know, what would you advise your clients in, you know, different scenarios, let's say?
Absolutely. When you're filing your beneficiaries, it's generally towards the end of the application. A beneficiary can be really anyone. It can be a friend, it can be a family member, it can be your children. Generally, they want to see someone that's an adult when it comes to a beneficiary, because then the funds can get deposited into their account. There's no issue. The nice thing is life insurance bypasses creditors and it bypasses probate, meaning that it doesn't matter what the wills or the estate, or essentially what the estate, if people are fighting, if there's a named beneficiary, it goes to that beneficiary. That's the end of the story. So for me, my life insurance money goes to my wife. The wills say what needs to be done with it. But if, and that's generally how it'll happen. Husband will, the beneficiary will go to the wife, the beneficiary will be the husband, vice versa. Now, a common mistake I see with families and inexperienced advisors is they will just stop at husband and wife. But what happens, and we don't like to think about it, but we do see it happen. What happens if husband and wife die at the same time? It automatically then goes into the estate, and now it's painful. Now it's locked in there, and there's no access to it. It becomes a nightmare. So what people will do, what I set it up, is that husband and wife each cross over for their life insurance if one dies. If both die, there's a contingent beneficiary, a runner-up is second place. We name the children as the beneficiaries. If there's 2 kids, 50%, 50%. I like to make the joke, if there's a favorite one, you can give one 51 and 49, everybody laughs, haha. Insurance appointments shouldn't have to be doom and gloom. You're protecting the people care about, right? And then you name a trustee. What's very crazy is when people ask me what my job title is, when it comes to families, I am a trustee designator, because and we've sat with a client recently, they don't have trustees. So who's gonna take care of your kids if both of you were to pass away? You guys haven't thought of that out yet? Like I don't have kids, but I already know who it's gonna be, and my wife would agree with me. And it's not like, oh my God, you're a bad parent for not knowing it, but please think about that. Who's gonna raise your children if anything happens, right? So if both parents passed away, or one after the other, whatever the case is, the life insurance would be given to essentially the children's names, and the trustee administers it. Again, having a will is essential. Some insurance policies come with free wills that you can modify and change as you want. The beneficiaries and contingent beneficiaries, as long as you chose revocable, meaning you can change it as often as you want. I don't really ever see a scenario where someone would name an irrevocable beneficiary, meaning you can't revoke it, you can't change it. Once that policy is signed, the beneficiary would have to sign off on saying, take me off. I have yet to set up one like that. I've never seen the need for it. So just make sure, if you are setting up a policy, that it is revocable, so you can change it later if you got a divorce, for example, right? You don't want your ex-wife to be the beneficiary, or your ex-husband to be the beneficiary of your $1 million life insurance. That now you're with another spouse and you pass away and they're getting the money, right? You can see that happening sometimes.
That's why your financial advisor needs to sit down with you a minimum of once a year, and I've heard the stories where they just ghost people, and life changes, life goes on, and nothing changes in the policy, which probably should have a long time ago.
Totally, and it's a two-way street, right? As an adult, they should be responsible. I had a client call me complaining because they weren't getting letters. They changed their phone number, they didn't have an email, and they moved and they never told us.
Send a pigeon.
So send a pigeon, send a smoke screen. You know, be an adult. If you moved your address, you have to change your Canada Post, you have to change your home and auto insurance anyways. Life insurance should be tied. We call it like the doom box, right? All of the life insurance policies go in a box. We all know where they are. It's under our bed. Our bed does the thing here. All of the policies are scattered there. We know what the situation is at any given moment.
Yeah.
Right? Thankfully, I'm my own advisor, so I just call myself up and I answer my own phone call and I make the changes, right? But it is a two-way street.
Yeah. So back to World Financial again. So this is World Financial is a brokerage that provides access to a lot of different companies that provide different services to their clients. Now, how about the part where people want to join the World Financial Group? What's the process? What's the timelines? And just in case people are wondering.
Yeah, so that's a two-part question. I guess I can break down the brokerage aspect. So when I was starting, I wanted to look for a company where I could first start part-time. I didn't have to give up my real estate career. That was number one important to me. I was researching different brokerages. One of them said, no, you have to leave your career. You can't be participating in other activities. And at that point, I wasn't quite ready to do that. And by the way, they offered me no guarantees either. It was, you have to come work with us, you have to build a business, you have to call your friends and family, you have to get clients, you have to door knock, you have to do this, you have to do that. And I had to leave my job. So I didn't like that. There was another company that offered me to start like a salary. It wasn't going to be very, very much. It was around $40,000 a year or something along those lines. I'd have my own little office cubicle. Same scenario. If you're not calling, if you're not reporting, I was basically getting a boss. I didn't want to do that either. Why would I leave a business to have a boss? If you weren't hitting your quotas, you were hitting the door was hitting you on the way out, right? I didn't want to do that. I didn't want to be forced to sell life insurance. I wanted to create this business more passively, where if I found areas where I could help the people that were closest to me and they can refer me people and I can help those without having to knock on doors and say, hi, it's Joseph here, I would like to sell you. I've been in those businesses before, they're not fun. So number one, it was important I could start part-time. I didn't have quotas, I could do it how I needed to do it. I had good training, good mentorship from people that already were successful. And not selling my own product. I found that if you only sell one product, how can one product be good for absolutely every single one? I have 3 life insurance policies. 2 of them are with one company. The third one is with another company. My wife has 2 life insurance policies. One is with the same that I have with the first 2, and then the other one is with the third company there. Her critical illness insurance is with a different company than my critical illness, and I have a disability policy with another company on top of that. So if I'm now I could have, all of the companies that we deal with could have all sold me the same thing, but I'm shopping around for my own family. The person at the bank isn't shopping around, they have one thing and that's it, right?
Yeah.
How is that going to be good for absolutely everyone? It's a tough sale, that's a tough close you'd have to do on me to pitch me that. So I wanted to be able to look at a client specifically, face to face, and now because of Zoom to Zoom, and say, I did my work, this is the best product for you. All of these, they're with different companies, like my mortgages are at BMO. I personally bank at TD, but my mortgages are at BMO. That's where the better rate was at the time, so that's where I went. The different insurance companies based on my age, all of that stuff, based on the corporations that I do, it made sense to be with those companies. And my clients love it because sometimes I'm going to show up with this policy and sometimes with this policy, and then they'll refer me a friend and they'll be like, oh, did you get this policy with Avari? And it's like, no, I got mine with IA. He showed me the premiums, they were lower to go with this company, whereas the person referring them to me, it was cheaper for them to go with another company. And then I hope that made sense, that why I can offer everything now versus just a few. And then work. People join our company, join our firm, and they expect leads to be given to them. They expect us to teach them everything that we know. They expect us to help them pass their courses, and they expect to get leads. The business world doesn't work that way. When I started real estate, I wasn't getting leads, I wasn't getting help, I was figuring it out by myself. That's how business works. Our business is very difficult. Despite what people think, it's like, oh, I just get a license and I can make calls. A lot of people fail. A lot of people fail in our
Because who you're gonna call.
Because who you're gonna call. Exactly. And they don't want to make the calls. Right? It's just, I started selling insurance, and then they're gonna wait for 2 years and they're never gonna get a response on Facebook. You start a real estate business, you start a window company, you start a restaurant, you need to be marketing to your friends and family. Why wouldn't you want to talk to you? If you have a solution for an issue, which everybody dies, everybody has to pay the tax man. Nobody likes the tax man that's in business right now, right? Everybody has debt. We all, not us, not anybody listening on here. None of us have debt. We're all good, right? But everybody we know has debt. We have the solutions for that here. But it requires work ethic. It requires you to be a good person of character. Because if you're not a good person of character, this firm will show that. That means your friends aren't going to answer your phone calls. Not because it's our company, because it's you calling. I hate to say that. Has nothing to do with the company. It has the fact that you don't have the credibility in your market to say, hey, you're my friend, you're my brother, you're my uncle, this is good, it's worked for me. And they don't even get their own insurance products, and they don't want to protect their family, but they are trying to sell it to others, right? Yeah. So I'm on the cautionary side. When I'm bringing people in the business, I'm not interested in working with everybody. I'm interested in working with a few key people that are strongly credible in their current marketplace, because I would rather just work with my own clients at that point. I don't need to train other advisors. I want to, based on a principle of exchange where someone changed my life over a decade ago. I want to be able to reciprocate that and help that with a lot of people, but they need to be willing to match with me, but they also have to be good character, strong work ethic. They need to be able to take a couple no's and a couple punches to the face here and there. But guess what? Every business is like that. And more importantly, work is hard. What was hard for me was getting up in the morning at 6 o'clock in the morning, putting my coveralls and my work boots into my backpack, putting my backpack on, jumping on the bus back then, and then eventually into a car, and getting to site for like 7:30, 8 o'clock, 8:02, and you get yelled at. You work till 4 o'clock, 5 o'clock, you get back home, you're exhausted, you don't want to talk to anybody, you fall asleep. You do that Monday to Friday, and I truly believe they call it the weekend is because by the time the weekend hits, you're too weak, it just ends.
Mm-hmm.
And then back to Monday again. That's hard work. Starting a business, picking up the phone, calling a few people, it's not hard work. It takes a while to get there, but it's not physically hard.
No.
Right?
Building your own brand and recognition.
Yeah, this is just a platform.
Yeah.
Just like anything.
Yeah, like World Financial Group has the presentation app. I think it's a great comparison to compare us to Facebook or
Airbnb
and Uber because they're platforms. They don't produce anything of their own. They don't own any assets per se in those businesses, but they're just platforms, and I guess that's the way to be these days. Etsy.
Yeah.
You know.
And you hear horror stories from everything. You hear horror stories in Airbnb, horror stories in Uber, horror stories at Etsy as well. That doesn't make the entire company bad, but eventually those people get found, weeded out, removed, life goes on.
Yeah, pretty much.
Yeah.
Well, thank you so much for joining me today, and I guess if any of the viewers have any further questions, they can contact me or Joseph anytime for any of your insurance needs. Have a good one.
See you guys. Thanks so much.